This is the London Fintech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. I'm Tony Clark, and this is the London Fintech Podcast. Today's episode is one for the CFOs and the deal makers out there. I'm delighted to be joined by Nick Rose, who is CFO at Enable. Enable is a venture-backed collaborative rebate management platform that helps CFOs and procurement professionals in all sectors take control of their rebate programs and turn them into an engine for growth. We're going to be talking with Nick about what that really means. But one of the things that caught my eye about this is the extraordinary trajectory that Enable is going on, having taken 270 million of venture-backed funding so far on a Series D raise, now valued around $1 billion and growing fast. And also for Nick, his journey, I think, is going to be really interesting for the audience today, because he started out in a very different sector and has only made the crossover into venture-backed fintech really very recently. So I think there's going to be some interesting learnings and some experiences, I'm sure, that Nick can share with us as we get into this. Anyway, welcome, Nick, to London Fintech Podcast.
Hi, Tony. It's really great to be here, and thanks for the invite to come and join you.
Brilliant. Thank you. Well, it's good to have you on the show. Let's get to know you a little bit. Perhaps tell us a bit about growing up, early career. How did you get into your first professional roles?
University degree and in geography, as all good geography degrees lead into accounting. So I joined EY in London I was there for 6 years. I qualified as an accountant, and then spent 3 years in the corporate finance part of the business, really advising companies on M&A activity, and then decided to move out of London, just married, and moved out to Northamptonshire, joined Travis Perkins as in their acquisitions team at the time, and we were doing a lot of acquisitions of small builders merchants dotted around the country, and a couple of larger deals as well. And that was the early, I suppose, part of the career. Progressed within Travis Perkins for quite a few years, and then I suppose my role as FD of the Travis Perkins business led into software and improvement of margin kind of focus, where the kind of visibility the group had into its trading profits and margins was not great, and the new group CFO asked me to step out of that trading business and really go into improvement programs around the company with a software slant. That led on to me meeting Enable and bringing Enable into Travis Perkins as a rebate management platform. The group for Travis Perkins had lots of visibility issues and calculation issues and complexity around the rebate space. And I found Enable, brought it in, did the implementation program, and it was a huge success. And then I guess probably a year and a half later, joined Enable as CFO and started the journey of the last 5 years, which has been pretty exciting.
Yeah, so I think you've partly answered my next question, actually, which was how you made the crossover. I talked about it in the intro, and just listening to your story there, it's interesting to note that so many careers in some way either start at or finish at consultancies, big four consultancies or accountants, and so you had the EY experience, and then my sort of outside in view on CFOing for Travis Perkins would be that you're running lots of numbers on inventory in timber yards and construction. Yeah. And you talked there a lot about doing M&A and about technology enabling the business. And so there's some things coming out that you might not necessarily have presumed went with the Travis Perkins job.
Yeah, I've always liked looking forwards rather than kind of reporting the past and planning for the future. I've always tried to take my career in that sort of direction, and software now is the answer to lots of those kind of visibility issues and forecasting. Yeah. So it was a pretty natural, pretty good step to take for me in my side.
And what were the common principles and practices, perhaps, from being, I'm going to say, a TradFi CFO? It's not even TradFi; it's a bricks and mortar CFO into now being a fintech CFO.
I mean, obviously, you have no stock in fintech. That was and no branches, no assets other than your IP and your people. So moving from a business with 24,000 colleagues across the group to one with 55 when I joined was quite a step. My family kind of thought I was mad. What are you doing? Going from a huge kind of well-known company with huge brands and lots of support around you to one where you're literally going back to basics and you're kind of joining into a finance team you're the third person into that finance team. That was quite a switch. But the insight that I'd had into what Enable does, having lived through the problem that the Enable product solves, and seen the benefits of that solution, and then adding on to that the strategy, the story, the opportunity in front of Enable as a business, came at the right time for me. And it was a point in my career that I wanted to do something really different. I'd been in the same place for quite a few years, and it was just right timing, the right kind of shape of opportunity. Luckily, I was in a position where I could take a risk for a year or two, and if it didn't work out, I'm sure I could have gone back into something similar to TP again. But really, the last 5 years have been a story of huge pressure, huge amounts of work, but also a huge amount of success in our growth story. We've gone from sort of 55 people, like I say, when I joined, to about 650 as we are today. We've grown our sales by about 40 times in that time as well. So it's been a heck of a journey for the business, for our product, for our customer base. We've gone from about 20 customers to over 400, and it's been a huge journey personally for me as well. So not just learning the fintech space, and really what makes a business tick in fintech is pretty massively different to what makes a distribution business tick. Yeah. But I've also moved the family across to Canada. We live in Toronto now, which is our North American base, and it helps me to do my role from that time zone, learning a lot about US GAAP rather than IFRS, and how do you report the business and make those decisions around the business. But also, what I can bring as an ex-customer is pretty valuable. So I get involved in quite a lot of conversations with customers. How are they actually going to get value from our product? And I can talk quite objectively around what we need to do as a business going forwards to being a public company. So I've been in one at a pretty senior level in finance before. So that sort of experience doesn't really often happen in a software startup.
Yeah, so I can see how you're bringing those scale experiences into Enable, and it is a remarkable growth journey. Sort of 50 or 55 people to around, I think you said 700. Are you, for those watching this on the YouTube video version of the episode, you've got Enable office in the background. Are we talking to you in the UK today?
Yeah, I'm actually back today's the 17th of December as we're recording, and I'm back for Christmas to see family and friends and stuff. Yeah. So I've come back a week early, and the rest of my wife and children are coming over at the end of the week.
Yeah. And Next Wave HQ is it San Francisco?
So global HQ is San Francisco, but we've only got a very small office there. It's really our chief exec and a couple of senior people, plus a customer success team based there. So we have to have a base there. It's where our venture investors are based themselves, and we've been fortunate enough to persuade them to invest quite big sums of money in Enable. So we want to be close to them. But about 3 years ago, we opened up in Toronto, 3.25, I think. We opened up in Toronto, and that's been a real successful growth story for us in North America. Great talent team, depth of talent in that city, and it's really great base time zone wise, East Coast, and the city itself is a fantastic place.
Brilliant. Okay, so we'll talk a bit more about Enable in a moment. Rebate management, when we were talking pre-show, I had to confess I didn't really know. What is that? Perhaps you can explain it. Let's start there. What is a rebate?
So we define a rebate as anything where money flows back up the supply chain. So if I'm the manufacturer and you're the distributor, I will be selling you product all the time, and you'll be paying me money for that product, and I'll keep that money. And if you hit various performance levels in the agreement that we have, and in your trading with me, then I might pay you some of that money back in the form of a rebate. And later on, it could be quarterly, could be annual, it could be based on volume, could be based on pounds or dollars spend. Any number of different complex things would be within that. But really, it's when money flows back from the manufacturer or to the distributor, or from the distributor to the customer or end user, flows back down the supply chain, as opposed to normally money flows up it. So, and anywhere where there's a trading agreement between two business to business parties means there's a deal in place. And what we find is at least 90% of those trading agreements around the world, in any vertical you choose to look at, has some kind of flow back and they call it lots of different things. So rebate, claim back, special pricing agreements, probably 25, 30 different names. But what we're saying is it's all a rebate, because that's the definition of money flowing back down. And it's earned. The important distinction between a rebate and a discount is you have to do something to earn the rebate. Whereas a discount is just given up front off the invoice price. And what we see is discounts are very quickly forgotten. So rebates are there to really help foster a collaborative trading relationship between buyer and seller. Whereas the discounts are kind of, they're just one-hit wonders, really, and there's nothing long-lasting or no development of a relationship in the use of discounts.
Yeah, it's a useful distinction. Such a simple idea. So, and we see this in my consulting business, there are various commission structures and targets based. We do use the term discount, but they're usually based on hitting performance points. So I think would probably qualify as a rebate in your definition. And these things are always on spreadsheets, and they're just all over the place. So how you track the money flows and the status of all the different arrangements, I can see would be a very practical, real world challenge.
And I go back to Travis Perkins, and I was for a while I was running the rebate team that had to calculate and allocate out rebate earnings across the group, and that consisted of around 1,000 suppliers with rebatable deals across 2,500 branches in 12 different businesses, over 1 million different products. And when you look downstream to customers, about 300,000 customers. So the complexity in all of that was just enormous. And then you consider layering on different routes to market. So do you buy stock from the manufacturer direct to branch? Do you go through a central distribution hub? You do go direct to customer. And then when you sell it, do you want to cut it by geography, by branch, by product, by supplier, by customer, by channel? And all of those things are being done by spreadsheets effectively, because no ERP system out there is capable of handling that kind of complexity. And when you think about the 150 or so commercial purchasers just on the supplier side, all doing different deals, all creating their own terms and conditions and method of trading, and all those manufacturers coming in saying, well, we want the deal to work this way. And sometimes the manufacturers kind of got the power, and sometimes Travis Perkins did, depending on the relative size and buying power. You can imagine the sheer number of different lines of code and lines of programming that was required on Excel. But we were handling most of the complex stuff on Excel. And whenever anyone said to me, well, we've just got a rebate result this month or this quarter that doesn't make sense, can you explain it? Can you delve into more detail? And I'd go, well, I can try, but it's really difficult to get down to the real detail. And we knew that we were making decisions that were bad for the business based on inaccurate data. Overall, hugely successful, profitable distributor of building products. But underlying it, so much was kind of a grey area. And cash all added up. There was no issue with the accounts or anything. But once you could get real insights into your performance and your actual, what you're paying for products and what you're really, really net selling them for by any dimension, then surely we can make better trading decisions as a result. From there comes, okay, what's the biggest part of that supply chain that we don't have insight into? Well, it's the rebate number. So let's go and fix it. Yeah. And that's what I ended up doing.
So we've really, I think, unpacked the industry problem there, which is always a great place to start. I wanted to ask you, how did Enable actually come about? So what was the catalyst for Enable becoming a thing? And I suspect that Travis Perkins might have been part of that as some sort of lighthouse account, because given that you were so early in the business and you'd already been working with it, I think you said for 1.5 years. So, but just tell us about how this sort of really started at the beginning.
Yeah, so Enable was kind of a pretty small, quite sleepy professional services software company, but it hit on a great idea. So our two founders really, Andrew and Dennis. So Andrew was a real young whiz kid on computers, and Dennis met him funnily enough at a flying school, and they got chatting, and Dennis says, well, I run this distribution business that distributes beauty products and household kind of cleaning products to the non-chain supermarkets. the smaller supermarkets. But I have a problem with rebates because all these manufacturers like P&G and Cussons and lots of Unilever, he's buying lots of things from them, has no power, and they're saying, well, you have to have this rebate deal. And so Andrew developed a program to help him start to decipher those deals and actually find the accurate numbers. And at the time that we were looking at TP for a new product, Enable came up, and actually there's very, very little out there back then. This is about 2016, 2017. There were no other competitors really of any scale. There's still no real competitors of scale. It's a pretty wide space in the software market. And TP took a plunge. I was able to persuade the business to say, okay, Enable's going to develop this software into something that works for Travis Perkins. And I was able to pull 2 people out of the finance team and 1 person out of the commercial team to really work closely with Enable for over a year to help them design the real nuts and bolts of what works under the hood in the Enable solution. So it was providing insight and information and working practices and understanding how a distribution business actually works. And then we ended up launching back end of 2017 into the business, and then the rest is kind of history.
Yeah, I think there's something very important there for every fintech founder. So how critical that, I called it a lighthouse account, but that sort of foundation client relationship clearly was for Enable at the beginning, because without the the enterprise input that you were giving and that TP were giving, I would imagine the product wouldn't have grown the same way or as fast, and this really gave the platform for everything.
Yeah, definitely
followed.
Would have been different. And then what Enable especially brought to the table was this strategy of going on the cloud. So we're truly cloud native. There's never been an on-premise solution for this. The TP, couple of people in the TP IT team were pretty enlightened early on with cloud adoption and said, this is a good thing. It gave Enable a lot of confidence to say, okay, we're going to develop this product into a cloud solution. And then Andrew, being Andrew and always looking for the next kind of challenge and big thing, said, right, what we're going to do is take this global, take it big, and we're going to go and try and raise money in California, Silicon Valley. And I remember it was November 2019, and Andrew had already done a couple of visits, but myself, Andrew, and another guy who was heading up the sales team at that time called John, went off to San Francisco, and we must have met 20, 25 different VCs. And the pitch became more refined as we did it, and we listened to their questions and we tried to answer those in the next pitch to the next person. And we ended up managing to persuade 2 VCs to invest in us. And that closed in February 2020, just before COVID lockdown, which was great timing. And then we had firepower to obviously start really investing in the product a lot faster than we could have done otherwise, and investing in the go-to-market motion and the sales team. So we pivoted from a small profitable business really based in the UK with a few global clients to one that was deliberately loss-making, really changed the kind of metrics and the way the business looked to this thing. We had a big focus on helping the VCs recognize the pattern in our business. So we talk about pattern recognition quite a bit. And one example of that is Enable used to actually own the freehold to the building that's just behind me in Stratford-on-Avon. And we sold and leased it back because the VCs are saying, well, you know, money tied up on the balance sheet like that is better invested in the business. So get rid of it, and did a good deal with a 10-year lease. And we got a good amount of cash in for that. And our view is we can then invest that in the business at a much better return than having it tied up with a bank loan and no rent.
Yeah. The fintech trajectory is something that in this conversation I really want to dig into a bit, but you've shared quite a bit already. What did you tell the VCs was your target addressable market then? Because just considering that problem statement we were talking about and the amounts of money that are flowing sort of the other way down the supply chain and the amount of corporates there are out there, then I would guess it's a big number, but how do you calibrate for that?
Yeah, well, we kind of started at the whole global economy back then.
Okay.
And you know, I think we said it was about $70 trillion of a global economy. And we think that 80-90% of that has a rebate of some form in it. And we've proved out our use case in a microcosm of one of those verticals, which was distribution of physical goods. But then you kind of split that vertical into several major industries. So building materials, we're now winning customers in lots of different ones like pharma, automotive, and then you get into services as well. So we've even got a recruitment agent as a client because they have lots of deals with their customers and their suppliers. So we said, well, look, if you take the problem statement that every industry has some kind of rebate need or rebate management need, and none of those are served very well because we've looked at all the ERPs and individual players, and there's just no one there thinking about doing what we're doing. And you add the collaboration piece, which is the reason that ERPs have never made it there, is there's a collaborative element to a trading deal where buyer and seller work together to create a better outcome. And the ERPs are very inward facing and will never let a third party log into their solution. So if you've got we use NetSuite at Enable. NetSuite will never let any of our customers or suppliers log in to approve something. But that's exactly what happens with Enable. So our customers will set up a trading deal and then invite their trading partner to log in. They can negotiate the deal through notes and through the system, and they will sign it off, and then our customer can share data with that trading partner to a greater or lesser extent, depending on what they want to do and how kind of secret or transparent they want to be, and that just fosters this collaboration piece. And our firm belief is that through that collaboration, you get to a better result overall. And kind of mutually beneficial rather than trying to have this kind of bloody what someone has to win relationship, and that's not what we're about.
That brings us back to the product, actually, which I wanted to ask you about. So all that complexity and how you encode that and capture that in a simple and accessible flow and you've already explained something that I didn't appreciate, which is the platform ecosystem dimension of putting a trading partner on the other side of it and then sort of co-creating the deal on the platform. So that's clearly a part of it. But if you were to sort of in simple terms, explain what Enable does and that is so transformational compared to the spreadsheet version of all of this, and what's powering the impressive growth rate that you have at the moment. I mean, how would you describe the product?
Well, I think one of the things that really made it click for me was when I compared it to the old method of doing a deal in a normal company. So your commercial person, buyer or seller, will be negotiating a deal with their trading partner. And they'll capture that deal on a Word document or Excel spreadsheet, PDF it and sign it. And there's all terms and conditions attached to it. And then they'll do two things. One, they'll put it proverbially in their top desk drawer and probably never see it again until they start negotiating it the next year. And secondly, they'll print it off and throw it over the fence at some poor analyst in finance who has to decipher it, understand what the intent of that deal is, and then go program into Excel a way to bring in all the transactional data, for that transactional data to kind of read the contract in some way and then calculate accurately with visibility and transparency the rebate earnings that you've got. And that simply is fraught with human error. Excel can't cope with that complexity, usually too much data. And so companies go to a database type approach and will be able to handle the data these days. But the real crux of what Enable has as a powerful benefit is the deal itself is actually negotiated within the solution. So when we ingest the data that our customers are putting into the system, as long as the data coming in is reasonably clean, the system then can't help but calculate the right number because it was the originator of the deal.
And you've been able to encode all those different potential complexities on rule sets. So sort of if this, then that. I'm saying if you hit this number, then I want this condition to apply. And there may be some nuance only for certain types of customers or certain product sets. And I can imagine lots of different variations.
So there's dozens and dozens of different deal types that sit within the system just for customers to use. And what we do is we have quite a heavy configuration and implementation team that goes and really helps a customer configure the product to work in the best way for them. And it's very flexible, very easy to do, as long as the data's right. And so that all just adds into the mix. And when I look at what happens, what's the outcome for customers from this, the fact that the data is actually in the system and the negotiation happens in the system. And I asked the question, how many disputes with your trading partner did you have before on just data and rebate calculations and the accuracy? And how many do you have afterwards? And that's the litmus test for me. And generally, well, I know at Travis Perkins, it just fell off a cliff, because you could go to the distributor and say, is that the data set? Well, here's how the solution is calculating it. And you signed this. Go find a difficult kind of part and a difference, and no one can.
Yeah. And what sort of efficiencies are your clients seeing?
So I can talk to my experience there. So we kept the same size of rebate team before and after pretty well. There was about, I think, 16 before and maybe 14 after. So there was not much actual cost saving. But what happened was that those people kind of pivoted a little bit in what they were doing. So instead of really spending all their time worrying about accuracy and moving data around different spreadsheets, they could start analyzing the results that came out and become a business partner that was prepared to give decent advice to the business. So we found one product group of sheet materials, when selling to a particular kind of customer type, was loss-making. And so we said, well, should we stop that? Well, okay, those loss-making sales are maybe attached to other high-margin sales. As long as that's the case, keep doing it. But if it's just a standalone one-off sale, no, we've got insight now to stop it. So those real pieces of insight and advice and getting better trading decisions came out of the back of the solution.
Yeah, I think it's what the analysts are calling decision intelligence, but switching your team to strategic input rather than just administration.
Exactly. So suddenly it became, I would turn around and say that team now generates value rather than just keeping score. Yeah. And that's the kind of simplistic way I see it. And that kind of brings me on to the really exciting future that we've got now. So we're actually launching what we're calling AI-powered analytics at the end of January. We've been developing it for a few months. And when you see the demos and the excitement it's causing amongst our customers to get that kind of learning capability from our data sets and saying, okay, what happened with this sales curve that we can see here? How did our margin improve? And then it will analyze in a couple of minutes what happened with the couple of customers that are buying that, and then say, these customers have a similar buying pattern. Why don't you try moving the price with them like you did with these two? So it's so great insight and information at your fingertips. It's going to be super exciting.
Have you built your own language model for that, or are you plugging in one of the big platforms?
We don't have 3 years and 300 engineers to go build one. It's better to buy and partner with a company whose speciality it is to build these things, and we're going to stick to what we're good at.
But you have got a lot of data. You have got a lot of data. So are you training your AI sort of in the narrow sense to really interpret rebate data as obviously a generative overlay would allow you to query the data, but I imagine you need to train the model as well.
Yeah. So we've got a data science team that's really focused on figuring out the best reporting and the best analytics, and some of it's obviously kind of backward looking, what happened in the past going to influence the future, and some of it's true kind of generative AI that it's looking at these patterns and saying, here's the trend, why don't you do something about it?
Yeah. And so how important is the wider technology or tech stack for Rebate, for Enable, and for solving this problem? I mean, it's not like when you go to an institution and talk to the trading desk about low latency tick data and super high volumes potentially. I mean, I think that's a different business problem. But do you really see the value of Enable sitting on the choice of technology, the way you've deployed it, or is it more perhaps around the business dynamics and the frameworks that you've developed to deliver an elegant solution for rebates?
I mean, I think it's more about the product and the solution itself, because that's the magic sauce that we bring. I mean, we're hosted on Azure. It's all integrated into our customers' databases, and the data flow is pretty good. So in terms of the tech itself, we've got some tools that allow us to ingest data at very fast rates, millions and millions of lines. And we've got some huge enterprise customers feeding us all their data on a daily basis. So we're able to operate at scale. The great part of that is it gives us a massive data set of what's going on in the world and how things work and what's driving value, and anonymizing that and kind of understanding insights once we, especially as we build real kind of weight in a vertical, then we get to be the data set of choice and the data set that really means something. We can give customers kind of insights of, why don't you try this? Because this appears to be what the industry's doing or moving to.
Yeah. So I imagine AI is an important part of this, but the strategic vision and what's coming next, it feels like certainly size of market, there's a big runway, but what's the Enable ambition?
Really to create this rebate management category. It's not there at the moment. It's not very well served. And we want to be the market leader in that and to continue being the market leader, and to drive value in our customers. That's the ultimate aim here, because only through that will we create a company of substance.
And what do you think will be the biggest challenges in scaling the business?
I guess you always come back to people and having the very, very best people that we can, and the best talent in different places, all aligned behind a common goal. And I suppose our temptation is to go too broad and try and kind of solve all problems that anyone ever had. And we've got to keep a focus on our kind of ideal profile of customers and make sure we're really building to serve the majority and trying to avoid those edge cases. I think there's obviously what happens in the economy and could get headwinds with that. Who knows what's going to happen in North America at the moment? And there will be change, and is that going to be positive for us as a business? So lots of things around there, but really it always comes back to people and having a real great plan, product roadmap, and a really great go-to-market that takes that product roadmap and delivers it in a logical way to our customers.
Yeah. And we were talking right at the start about, I think you said, what makes a fintech tick. What would you call out perhaps as the real milestones or the real enablers, if you like, for where Enable's got to, enablers for Enable, where you've got to at this point in the journey? And I wonder whether there's some things that you weren't necessarily expecting, which have sort of propelled you to the next level.
Yeah, I clearly the big enabler is having a cash balance that you can spend, and a sort of very, very supportive board. So when the lead investor of each of our 4 raises has come onto the board and got a seat there, and their support is hugely valuable. They give you lots of insights, and while it's not around kind of necessarily running the business, the level of introductions they can make and kind of helpful people to speak to is terrific. So we're kind of left alone to deliver our plan in a lot of ways. I think the apart from the cash, the biggest enabler is, I suppose, the continued progression of the software, making it easy to implement, getting customers on board, getting the customer stories, getting the right people in place to just make that as low friction as possible and be easy to deal with, be really flexible if a customer needs different types of T's and C's just because of the way they operate, then we can do that because we're a small business. We're flexible enough to achieve it.
I love that. Being easy to deal with. It's often a little bit overlooked, but taking friction out of the engagement process is so important. Nick, thanks. You've shared quite a lot about Enable's trajectory and ambitions beyond, and also a fair bit about the product. And I've got a lot from this. For the audience, I think there's a couple of things I would love to get your steer on. Folks who are in another sector thinking of moving into fintech. For me, you sort of almost made the biggest leap, certainly that I've had in conversations on this show recently, coming from essentially sort of construction supplies to what you're doing now. Any advice for folks who are thinking of following a similar path and doing something that on the face of it looks really quite different?
Yeah, well, I look back now and kind of kick myself a little bit for not having done it earlier. The kind of pace of change, I've always been a bit of a change agent, and the pace of change in the software industry is phenomenal. Super bright, super motivated and talented people to work with. Not that there weren't before, but it feels like it's sometimes on another level. And that pace of change translates into a really fun environment as long as you're succeeding. So I think the advice would be to try and find a problem to solve that really means something, that adds hard dollar value rather than just kind of some wishy-washy. You'll get more efficient, and you'll find things easier, and your people will like it more. Come back to the actual pound notes, dollar notes value that you're going to deliver to customers, because that's the critical part. And then find a company that's doing that, or a team, and find one that suits you as a person and lets you grow in that.
Yeah, I can see, I love that. And I can see quite a few parallels. So pace and having some fun and finding a proposition that's got good product market fit. And for me, in my sort of day job, this is what we're doing in the consulting team. And I do find dealing with our team, many of whom are sort of early career, and doing things like this is sort of keeping me young in some sense. And sort of
I definitely have a pretty young average age at Enable as well. It's highly energetic, and it does add to the kind of vibe and the fun that you have.
And what would your advice be to the entrepreneurs, the aspiring fintech entrepreneurs who have an idea and want to take it forward? And you've been through quite a number of stages now, and I don't know whether you'd say the company is a unicorn yet, but you must be there or thereabouts. So what advice would you have for that?
Well, I suppose officially we are a unicorn, because that was the valuation on our last round was over $1 billion. So by that measure, I think it's less about the unicorn and more about growing your real revenue and having that trajectory and the acceleration. The valuations are eye-watering in terms of multiples of sales. But I think the word of advice for entrepreneurs is be really aware of what your product solves for a customer. Be really aware of the target market and how you're going to go to that market and sell it, and be easiest to deal with. I think that's a really critical part. Take that, package it up, and then the challenge is getting the right introductions to the right VCs, and that took us a while, and we went, I suppose, kissed a lot of frogs in a really good way, because we learned so much from the type of questions we were being asked, and then we found a really supportive a couple of VCs in our first round, and it's keeping them up to speed, keeping them in the loop on major decisions, and then you get that support. And if you are brave enough, go move to San Francisco, which is what Andrew, my boss, did, to be part of that ecosystem. And if you really believe in it, then you'll move to do it and back yourself.
Yeah. Customer and market focus. We've talked about that a lot on this show. Find the right team and backers, and really go all in. You can't be half invested in these things.
It's not for the faint-hearted. It's hard work, and there's a lot of kind of moments when you think, are we really doing this? But it's about that bravery and that confidence that you're solving a problem that no one else can solve as well as you can. And then you've got to find a way to sell it.
Okay. And final takeaway, anything that you're reading or listening to currently that you might recommend to the audience?
Well, the great thing about being back in the UK is I can listen to Radio 5 live in the car in the morning, and that's been pretty good. But no, we do share around our exec team. We do share the odd podcast and real insights into kind of thinking around software company performance and what's happening in the ecosystem. So I definitely listen to some of that stuff. And then I guess kind of music wise, I'm a bit of an old 90s fan. So anything around there.
I'm struggling for some 90s bands. It's 80s in my house.
Well, I've just got tickets to the Oasis reunion thing. They're in Toronto in late August. So I'm going to have to go to that.
Maybe the Toronto tickets aren't quite as eye-watering as the ones at Wembley.
They were still pretty eye-watering.
Yeah. Okay. Well, I'm sure you're going to enjoy that one. I tried to get the Coldplay tickets, and I won't bore you with it being 180,000th in the queue, but that all didn't work. So we should do an episode on Ticketmaster, perhaps. But that's something.
Yeah. Good luck with that one.
And if folks want to find out more about Enable or about you, Nick, where do they go?
Enable.com is our website. Can always get me on LinkedIn. So please be delighted for people to reach out and have a chat.
Yeah, we'll put that in the show notes. Thanks so much.
Thanks very much, Tony. Great to be speaking.